Welcome to Home Biz Tax Talk. My name is Lysandra Everett, and I am the Home Biz Tax Lady, where I help home business owners win the tax game. Home Biz Tax Talk airs Monday through Friday, 9 o'clock-ish. And when you tune into my show, you're going to hear about topics that are important to the home business community. And today, we are focusing on how to pay yourselves, all right? How we pay ourselves. There's a lot of stuff going around about, and especially when we're coming into this new internet money. The internet is really making more people rich more often than in any other industry, I think. Whether it's, as compared to network marketing and all of that. Network marketing industry has also made several millionaires, but I think the internet has really increased more people's wealth and more quickly than any other industry, any other legal industry. Let me say that. How about that? All right. But the thing about the internet is this, that there are so many people who are telling you how to make the money, but nobody's telling you what to do with the money once you get it. And so what I want to talk about is really how to pay yourself in your business. And if you start these things now, if you put these in place now before you go and boss out, then by the time you get to bossing out, you will already have something in place so that you can really make better decisions about your money. Okay. So the first thing is when you get paid in your business, that money does not belong to you. It belongs to your business. Even though you are a sole proprietor or a single member LLC, that money does not belong to you. It belongs to your business. And the reason, let me say this before I get into this as well, is that the reason you got sole proprietor and single member LLC together here is because for tax treatment, your single member LLC is considered a sole proprietor. You still file the same tax form. It doesn't look any different. The LLC provides a separate identity for your business. It doesn't change your tax treatment. Okay. So the first thing when you get your money in, when you get paid in your business, is you need to set aside 30% for taxes. Okay. Period. Point blank, in a discussion. You can fight me on it later, but that is my recommendation, because that money is going to cover, it's going to cover your self-employment taxes on the profits that you earn. It's going to cover your income taxes based on the profit that you earn. It's also going to cover any type of state filing requirements, any annual renewal fees. That's what that 30% money is going to go to. All right. So now when it comes down to paying yourself, you want to pay yourself a set amount, whether it is a percentage of your income that, of the revenue that you generate, the money that you earn, whether it's a percentage or a specific set amount, like a salary. Now, I know also my entrepreneur people is like, oh Lord, a salary, a wage. Listen to me. Okay. This is how you run a business. All right. So when you're getting started out, pay yourself a percentage of what you earn. I recommend 30%, because that way you get some of what you work for. All right. Because when you don't pay yourself, let me say this, when you don't pay yourself, you then lose the motivation to really go out and do more. If you're consistently and constantly just reinvesting in the business, then really what are you getting out of it? Even though you are serving your audience, you're serving your customer base, you really got to get something out of this too. So I say it all the time. I don't care if your 30% buys you a cheeseburger. It's your cheeseburger. Go enjoy it. If you want more than the cheeseburger, then you need to go make more money. All right. So number one is to pay that set amount, and whether it is a percentage or a dollar amount. Okay. As your business grows, you may, have a set salary amount for yourself. All right. Number two is you want to pay yourself on a regular basis, whether you pay yourself weekly, every 2 weeks, or twice a month. I'm every 2 week kind of girl, or weekly. I'm not that 15th and the 30th kind of girl. So really you want to set that for yourself, but you want to have it at regular intervals, because what you don't want to do is you don't want the appearance of using your business like an ATM. Okay. Meaning that, oh, I need a new pair of shoes, so I'll just go pay myself from my business to go get said shoes. You want to pay yourself on a regular interval, on a regular basis. And the reason that makes you look more structured in your business, because in the event that, God forbid, you do get sued, the one thing that you don't want to happen is called piercing of the corporate veil. And what that means is that, attorneys will then go past your business assets and then attach your personal assets as well. Okay. That's the part that the limited liability company is supposed to do for you. But if you're not operating your business financially sound and, in a financially sound manner, that LLC means absolutely zero. All right. So that's why you want to pay yourself a set amount and on a regular basis. Okay. You don't want to just, I'll go get some money Tuesday. Then, I ran out of money Tuesday. I'll go get some more money Wednesday. You don't want to do that because then it makes it really makes you look like you're using your business as the ATM. And that is really not sound business practice because that's really not how good business owners run their business. So set amount and on a set basis. All right. And then number 3, here's the biggest thing that you need to understand. As the owner, the amounts that you pay yourself is profit. Okay. It is not a salary. So here's where this cautionary tale comes in. One of the things that I have going on right now is I have a new client that just came into some new money, had their first 6-figure year online. We're just now filing taxes for last year, right? But what happened is this is his first, 6 figures. So nobody talked about the taxes. Everybody talked about the money. Nobody talked about the taxes. So this online business owner was thinking that, oh my gosh, whatever I pay myself, it's a salary. So then it's tax deductible. The amount that you pay yourself as the owner is not a tax deductible expense. It is out of your profit. So what happened? We went and paid $20,000 cash for a car. Why? Because we had the money there, right? And we see this all the time with new 6-figure business owners that go and boss out online. Then we got to go live the life. We got to go to fancy dinners. We got to go and buy new stuff. We get new car, get new wardrobe, get new house and all that because we have this money sitting there. And so now we're at the point where this business owner has a $50,000 tax bill and don't have $50,000 sitting in the bank. But the other problem on top of that is that here we are 7 months in the year and this business owner doesn't have money set aside for taxes because we ain't know about that. Okay. This is why it's so important that, if you got to have somebody on your team, whether you have a bookkeeper or something like that, because I'm thinking with this person making this much money, the assumption is, and this is where we have to be very cautious. The assumption is somebody making that much money, you got to have an accountant or something on your team, but that is not always the case. So understand that as the owner of your single member LLC or your sole proprietorship, what you pay yourself is profit. So if you're going to go and, pay yourself $20,000, well, you better be setting aside, have set aside taxes on that money already. Because see, the thing that you have to realize is that you're not going to escape paying taxes, period. Okay. Even if you elect to be treated as an S corp for your LLC, you are then an employee of your business and you have to withhold employment taxes. So you're either going to withhold employment taxes that you send to the government on a monthly basis, or as a sole proprietor, single member LLC, you are setting that side of money. You can put it in an interest bearing account as long as it's liquid so that when it's tax time and you got to write a check, that the money is there. Okay. But understand that the money that you pay yourself is not a deduction. The money that you pay other people. So if you pay an independent contractor, if you actually have an employee, that amount is a business expense that is to be deducted. But the money that you pay yourself is profit, and you need to have money set aside for that already before you go writing yourself checks. So, so the cautionary tale is, when you're coming into this new money, because like I said, the internet makes people really rich and hey, new money. But with new money comes new rules. Okay. And how to pay yourself is one of those rules. Paying taxes is another one of those things. You know, and I usually get people that are really upset about that whole 30% thing because, oh my gosh, that's so much money. But you were doing that as an employee anyway. You were having 30% of your check taken out anyway before you even saw the money. So you have to discipline yourself to realize that, yeah, you're still going to have that 30% set aside. The only difference is you can keep that money in some sort of interest bearing account and keep it liquid so that you can at least earn some interest on that money before you write the check. But you still got to write the check. Okay, so those are the three things. Pay yourself a set amount, whether it is a percentage or a set dollar amount. Number two is to pay yourself on a set schedule, whether it's weekly, bi-weekly, twice a month, however you do that, right? And then number three, understand that the money that you pay yourself is profit. It is not a tax deduction for you. So you need to make sure that if you pay yourself X amount of dollars, that you have already set that money aside. And if you just set the money aside once you get paid into your business, if you would just go ahead and set that money aside, then you don't have to worry about that. Okay. Just do it off the top and, you know, put it in a separate savings account, completely separate from your operational money, all of that. Set it completely aside. No debit card attached to it. None of that. I need for you to, need a code, have somebody else have the combination, whatever, but you don't want to go and borrow. You don't want to go and use that tax money for other things. That money is locked up until tax time so that in the event that you do have to pay, which as a business owner, you will, then you have the money set aside to write the check. Okay. So I really hope this helps you out. And like I said, if you start this stuff now, then you don't have to worry about it later. Get you some bookkeeping, get you some bookkeeping software. I talk about QuickBooks Self-Employed all the time, as a great place to start because I know it will grow with you. I have a link for that to share with you. Just check it out. You've got to start adding some structure to your business. And then once you have that structure, you can grow. So you can pay yourself, whatever dollar amount you deem. You get to decide how much you pay yourself. Okay. There's no written whatever. You get to decide how much you pay yourself, whether it's a percentage or a dollar amount. You make that decision because as an owner, you can do that. Okay. But you don't want to have a broke business. You want to make sure that you have enough money to operate your business. All right. So that's it for today's episode of Home Biz Tax Talk. Again, we air Monday through Friday, 9:00-ish, and you can come here to get your questions answered about your home business taxes. All right. Have a great day and I'll see y'all next time. Bye.